Hello friends, welcome to the Maybe Investor educational video series. How are you doing? I hope you're having great time in the markets. I have received many requests and queries on Fibonacci retracement. Many are finding it a bit difficult to draw the retracements rightly. Okay, so considering all these queries, I thought today I'm going to focus entirely on how to draw Fibonacci retracements and extensions. Okay, how to draw them, and more importantly, we are going to talk about how to make sure you are using it rightly and accurately. Okay, so anybody whoever have heard of Fibonacci retracement, they just go and try to use it, they just go and try to draw it, but they're not able to apply it practically in a right way, right? And just drawing it is not enough to be able to use it correctly. So let's talk about this, and let's straight away dive into the examples, because there's no need to talk about what Fibonacci retracement levels are. I have already talked about the details of Fibonacci retracement levels in the separate video, where we talked about how to identify support resistances using Fibonacci. So we don't really need to talk theoretical stuff right now in this video. So let's straight away dive into the charts and do lots and lots of practicals, so that you get enough visuals to understand how to rightly draw it and use it. Okay, so let's jump to charts. All right, so I have taken investing.com today as my charting tool, and the reason is that this is a free website. Everybody does not use paid tools like Broker and similar tools, so I thought this is more accessible to everyone. And whatever we talk here using investing.com, if somebody is using TradingView as his or her charting tool, they will have the same options. So anybody using investing.com or TradingView will be able to directly be able to use the exact steps what we talk here. And anybody else using some other tool, don't worry, they are going to look near similar to what we show here. Okay, all right, so I have opened the chart already. All of you must know, whoever is using investing.com, how to come to this stage, how to see the charts. Okay, so I'm in daily chart option, and I'm the full screen mode so that I can see everything. I mean, I get a good view. Now here, to get the Fibonacci retracement, first you have to open the chart which you want to take a look. So let's start with Nifty. Let's open Nifty chart as our first example. Okay, this is my Nifty 50 daily chart. All right, you can see this fall. I call it Corona fall. So this is the Corona fall which happened in the Nifty chart, right? And then right now we are retracing back, right? We are going back upwards. So Fibonacci retracement is basically drawing certain percent levels like 38%, 50%, 61%, etc., with respect to the previous uptrend or downtrend, previous rise or fall. Okay, so that is why you always think about one complete swing previously which has happened in the chart, and all the levels will be drawn with respect to that. Okay, so and I'm first start talking about retracement levels. Okay, so using this, you have a tool. How to draw this? You could do it mathematically by just calculating the range of this fall by yourself also. So if I want to get the 50% level of this previous fall, how do I do that? Take the highest point of the chart where the fall started, right? You can take this one, or even this one is fine, right? So I would always prefer the highest point in that zone, so I would take this one. So highest point is 12,430. Lowest point here is 7,511, right? So what's the difference? 12,000 minus 7,000, almost 5,000, right? So 50% level will be half of 5,000. So it's somewhere in between here, right? So it's very simple mathematically, okay? You can do that, but for that you have a tool, okay? Fibonacci retracement indicator, which is available here, is going to draw it automatically for you all the levels which is required, okay, as a standard retracement levels which is defined by Fibonacci, correct? So you don't have to calculate it again and again. Otherwise everybody can just do mathematical calculation and draw those levels or identify those levels. There is no problem, okay? But let's see where can I get that indicator here in investing.com. So here from the top, third option, right, uh, where if you click this small arrow you will get pitchfork, pitchfork. I'm sorry for that slip of tongue. Pitchfork, then other things like Gann box, Gann square, etc. We are going to use Fib retracement in that list, right? Remember Fib retracement. We are going to talk about two things actually. One is Fib retracement and other is trend-based Fib extension. So that in short it is called Fib extension. So first we are starting with Fib retracement, which will simply draw the levels, okay? So click on that, okay, and now you are here. So you start at the top, okay, click once and drag, all right, and drag and leave it, and then click once more and then leave it, okay? So now it is showing me the various standard Fibonacci retracement levels, okay? Bottom is showing you 0%. Next level going upward is showing you 0.236 means 23.6%, then 38.2%, 50%, 61, 78.6, and 100%. Okay, so how to use this now? Okay, how to use this now is now you have to look at how now after this fall, when the things have reversed, how the price is moving, back towards the previous high, okay? And in that process, when it is moving upwards, what are the hurdles it is going to face on the way is what these levels are going to show us. So it's starting from here. Our first hurdle was at 23 level, that was 8,602 at Nifty, right? You can see there some zigzag happened. Then next hurdle is 38.2%. Then third hurdle is 50%. 50% is where actually previous one swing high nearby there it stopped, if you see here, right? And then it tried to go to 61.8% retracement, almost tried to go there. Sorry, I was hiding something. Sorry. Okay, 50% acted decently in between. Okay, then 61.8% there was a peak, and now it is around 78% level, and from where it is a little bit struggling. There is more reasons, that we given 200 DMA falls in this area. But let's come back. Okay, so these are my various Fibonacci retracement levels. This is how I simply draw it. Okay, and right now it has almost gone to 78.6% level, and trying to see what to do after that, thinking. Okay, so these are always major support resistance levels, you can say significant price levels, which Fibonacci gives us, and we should always respect them as greater important support resistance levels compared to any other levels which you might have defined. Okay, now other interesting thing which you can do is, if the retracement levels when you draw are coinciding with your other horizontal support resistance lines which you can draw, right? If it coincides with them, you have to give very strong and very high importance to those levels. It's not necessary that every level price is going to stop or consolidate, but there are levels where price does consolidate, or previously also it has made, you know, bottoms. For example, in Nifty, this bottom here is around 61.8% retracement levels. So I will respect this 61.8% a lot. Okay, and in fact here you can see peaks and bottoms have happened in the daily chart, right? So whichever levels are coinciding more with historical support resistance levels, those levels going forward should definitely be given a lot of importance, and that is how rightly you should use it. Okay, let's moving on, just to practice it a little bit more. Let's open Bank Nifty. Okay, Bank Nifty again, you have Corona fall. If I want to see when now price is going up, what are the different levels at which I should be careful, where, you know, Bank Nifty can get resistances, right? Significant resistances, and where I will be more careful planning my trades, right? That will be the objective. So let's take Fib Retracement. Yes, click, start from the top, draw it all the way to the down, to the bottom, click, leave it. All right, so you can see here at 38% it made a peak, and in fact it is still hovering around that area. It is even struggling to go to the 50% retracement level, where in case of Nifty it was different. Okay, so this is where I should be expecting a lot of, you know, consolidation. And if it goes ahead, if I see here in the previous price chart, again I have bottoms around 61.8%, overlapping with 61.8% levels. So this 61.8% level here, which is in Bank Nifty 26,369, right? There is a significant resistance if at all it is going to be able to go to that area, right? And if let's say there is a breakout you get from here, you should expect that breakout to continue till 61.8% at the minimum, right? And face resistance there, so you could book profit at that level. Okay, so that's how you could draw the basic Fibonacci retracement levels. So the key point is what you have to do: draw the Fibonacci retracement levels using the immediate previous fall, or, you know, downfall or upswing. With reference to that, you will get Fibonacci levels, which you will use for future retracements of the price, and use it for identifying support and resistance levels. If these support and resistance levels coincide with previous peaks and bottoms in the price chart, you have to give it a lot of significant importance and respect it. Use it for, you know, identifying as profit targets or support areas for the price. Okay, now let's take few stocks, couple of stocks, right? Just to give some variety in our discussion. So I have this stock called Pyramid Enterprises, PEL. Yeah, this one. Okay, so where PEL is right now trying to rise, correct? Let's see where it stands right now as compared to previous swing. So I'll take this top and this bottom. Okay, so you can see it is here at around 78%. Currently price had a peak and now it is trying to rise. Okay, and even 61% has previous bottom. Even here there is a bottom, right? There is lots of time. There has been, in fact, there is a gap down here, so there is a lot of importance to this 61.8 retracement level, after which it broke out with lots of volume, if you see. So that means there was a significant resistance, broke out up, and now trying to go up. In fact, yesterday there was a good volume, and now it is trying to break this 78% retracement level, and we expect it should continue and go to its at least till its 100% retracement of this previous swing. Okay, so this is how you use it, and this is how you draw the levels and use it for your support and resistance identification purposes. And you have to use this is a very good tool, very good way to identify actually the right support resistance levels, instead of relying only on horizontal support resistance lines. Give more importance to Fibonacci retracement levels. Okay, one more in terms of stocks, Tata Elxsi, and after this we will go to Fibonacci extension. Okay, here Tata Elxsi daily chart. Again, let's draw from this peak to this bottom. Okay, and if you notice it in here, there is a lot of price consolidation in Tata Elxsi. Just bear with me. Yeah. Okay, there is good price consolidation in the form of a ascending triangle. Okay, and this ascending triangle has been broken up now, and where it is happening, the bottom of the triangle is around 61.8% level, and the higher side is basically challenging the 78.6% retracement. Now it has broken out, and the last day's fall has actually stopped at that line. If it can continue up, you should expect price rise up to 100% level, and that should be your price target, profit target for Tata Elxsi. So it should start from here and go up to 100% level, and you can trade that and make profit is what it means basically. So you can identify, you can combine your pattern identifications as well, and if such patterns, consolidation patterns happening at important resistance levels, important Fibonacci based resistance levels, and once you see the breakout, you will be clearly able to identify the target for that breakout, right? And you should use it for that kind of purposes. You can use it when price falls, it should fall to this level and then bounce back. You should expect that as well. Okay, so use it for all those purposes and enjoy, and this will help you to precisely, take entries and exits on at right time. Okay, now let's take few examples, couple of examples for Fibonacci extension. Okay, so I have say Dabur. Now Dabur chart is not going to look like others. So what is the case here is, this is the case here. I'm drawing the pattern what it has by combining these tops and these bottoms. Okay, and when you combine these bottoms, you can see that it is making what? Symmetrical triangle kind of pattern, right, in the daily chart, and it has now broken up here. Very good volume. In fact, last 3 days, 4 days have seen very good volume. So this is a good breakout, symmetrical triangle breakout, confirming that Dabur wants to go up. And considering the height of this, the size of this pattern, your target is huge. Target will be exactly, so your up move should be equivalent to the width of height of this triangle at the base. Okay, so a lot, right? So now that is the minimum, you can say that is the decent medium level target based on this pattern. Now in between, what are the targets and what could be the more details which you can go into based on your short term, medium term, long term kind of view on Dabur. You can use Fibonacci extension to draw those target levels. Okay, here we are not drawing the Fibonacci extension levels, calculating the levels only based on historical fall. We will use that information also, but the levels it will draw is not going to be intermediate levels based on the price history. It will draw the levels in the future because there is upward direction, there is no price history, right? But still it will draw. So let's pick Fib extension tool. Okay, trend based Fib extension is what it is. Click that, and what you do again, you start from this previous trend only. Okay, previous fall. So click here, start at the bottom here. Okay, in this case, and extend it to the top. Click here once. Okay, you have clicked, left it, but now again go back to this top one circle and extend it to right side. Sorry, I think I did a mistake. Click here, bottom, draw it to the top. Okay, click here and then again go back to this circle. Sorry. Okay, click here and then just keep extending the line onto right side. Put the right extreme side point onto the breakout point, whatever is the last resistance you see based on your pattern identification from where you have the breakout happening, right? This is the breakout, correct? So I am putting it the baseline to the previous highest point, and above this I am considering breakout has happened. Okay, so now with reference to this breakout point, the levels are drawn. Of course it considers previous range also. Okay, now the levels are drawn, and levels are drawn on upward, not here in the intermediate levels or previous levels. Now how do I see this? What are my profit targets for this breakout? What you do in this vertical price scale, you have to drag down, then only you will see the levels which are not visible right now. So here you have to click and drag your mouse downward. Basically it is shrinking the scale, and now you can see all the levels. So this will be the journey going forward, same levels 23, 38, 50 and all. Okay, and it will go upward. Now my main pattern based target will be almost 100% retracement of 100% retracement level. That will be how much? 642 for Dabur. Okay, so 642 to 650 you can round off. Around there your 100% target of this triangle pattern is. Okay, but intermediate also, if you are a short-term trader, right, you want to take be careful of intermediate consolidation, because making the 100% target is going to take little time. So in between, say I want to significant levels like 50% or even 61.8% levels, I could use for medium term kind of target and use that level. If price stops there, I will come out and book profit. Okay, so these are the levels I'll be careful of when the Dabur starts going upward, and this is calculated or this is projected based on Fibonacci extension. Okay, so when to use Fibonacci extension? Whenever you have to project future price levels where price has never gone, but after you see a breakout right now, based on whatever pattern or something you have identified, you want to see the future price levels where it can find resistances. Okay, for that purpose you will have to use Fibonacci extension. All right, so we took example of Dabur right now in this one, right? Let us take one final example for this, and then we'll be done for the day. Okay, so let's go to a stock called Dixon Technologies, Dixon Tech. Okay, Dixon Technologies. Here, what we have seen is there was a bullish head and shoulder pattern here. Okay, here. All right, so this is shoulder, the head, and the shoulder, and then the breakout. And breakout actually was mainly confirmed here when it dipped and confirmed and took support from the neckline, which I just drew, with huge volume. Okay, this is where it confirmed the breakout from this level, from this bullish head and shoulder pattern. So on this day, in this huge volume day, if I got to see this, right, or if I was tracking, I would have waited till then and then bought Dixon Tech. Okay, on which day this is, 12th June, sorry, yeah, 12th June, right? So from here, I would have bought, sorry, excuse me. Okay, so what I will do, I will have to project based on this pattern breakout on this day, what will be the price levels I should track, and I will use Fibonacci extension for that. Okay, again, start from the bottom here, go to the previous swing high, and then extend it to the breakout point, which I consider here on the dip, main breakout point because of the volume. Okay, and click and leave it. Okay, now you can see the levels which I should expect where resistances could happen, right? In fact, you see this first level, first peak exactly happened at 38.2% level, right here. So one target. Then if you see it, the next dip confirming that it was stopping there, and then even here again, if you see some decent volume, you could have bought it after the support taken at this level and it going up, right? So, and then other price targets for me here around this level, that is 100% level. So this was the main target for the pattern, okay, at 6808. And then next one after that is actually 1.6. There are intermediate levels also, because this is not showing all the levels as well. Okay, so it is straight away jumping to 1.61% level. It almost went there so far, but yeah, but next round may go there. Okay, so I would have, if I was trading this, which we did actually, I would have come out at 100% level at 6,808. Okay, it did retrace back almost to those levels, right? So this is how I could use Fibonacci extension, and especially in the case of where you don't see future prices, what will happen. To project and find out those future price targets, you will use Fibonacci extension. And to get the price levels while price is retracing the previous rise or fall, you will use Fibonacci normal retracement indicator. Okay, so these are the two things, and this is how you use it, and this is how you use it rightly. Okay, don't just draw and start using without understanding the all the levels correctly. Okay, so that is all for today. Okay, hope you have learned something useful. We publish our stock selections based on our trading methods in our monthly journal. You know that. Feel free to contact if you're interested, if you want to know more details about it. Okay. So looking forward to talk to you about something new next time. Till then, goodbye. Wish you great time in the market. Enjoy your trading. All right. So to get informed on new videos, it is best to subscribe to our channel. The channel name is Maybe Investor. Okay. Or you can visit our website www.maybeeinvestor.com. Once again, thank you and have a great time.